Welcome. It's Gayle Peterson. I'm Program Director of Oxford Impact Investing, and thank you for joining us for our Impact webinar on Ask the Experts. We thought it would be a great opportunity for you to send us your questions, where you are in terms of your own impact investing experience. Today we're going to actually, since it's 2020, the beginning of the decade, we're going to be spending, there's a common theme throughout our program on which will be around lessons learned. What have we learned since impact investing began? And what are the trends for 2020 and beyond? And so it's really an opportunity for us to think through at reflection and project in terms of what are the new innovations that are going to be in the field. Next slide, please. Yes, it's sunny and beautiful in Oxford. I happen to be in North America where I'm in the tundra and it's still dark. So I'll be in Oxford in February, and it's wonderful to see these images. And for our alums and our colleagues who know about Oxford, it's not raining. It's beautiful. So again, the Impact Series goals are really to examine impact investing on how we use investment practice to address the world's most complex problems. We use this as an opportunity to share groundbreaking ideas and really an opportunity for us to tap the talents of our global network, our faculty, our alums, and thought leaders in the field. Next slide. Again, this is brought to you by Said Business School, and we pride ourselves in being entrepreneurial, world-class community, creating programs and ideas that have global impact, tackling the world's most complex challenges, using business as a strategy and a tool. Next slide. We offer right now 3 programs. Impact Investing was launched 8 years ago. Social Finance, we've had our 3rd year, and Impact Measures is on 2nd. And it's really this nest of opportunities for our alums have identified their needs, and we created these programs to actually enhance the field and prepare students to move through impact investing, which is deal-centric, social finance, which is system-centric, and impact measures cuts across both of those. Next slide, please. We work across the ecosystem, finance ecosystem, from grant making, and our social finance goes from impact only to finance only. And we're deploying those resources, capital, throughout that ecosystem in blended capital deals for social finance. And these are the tools and approach that we use. How do we deploy capital in a robust way that we build relationships with different asset providers, whether family offices, whether development, finance institutions, philanthropists? How do we begin to maximize those resources and talents to address the most complex issues in the world? And for social finance, we look specifically at the Sustainable Development Goals. Thank you. Next slide. We think about the work that we do as problem-centric. It's really about the structure should be informed by the problem that you're trying to address. So we think about this in the context of how we do impact investing, social finance, and impact measures. And this is a UN Human Security Frame, the linkages of these problems at the nexus, and how capital can do good and not harm when you're trying to address the lives of the most vulnerable, whether it's people or planet. Next slide, please. Again, we have a robust community. This gives you a sense of who's represented in our confetti dots, where our students are from, and what experiences they bring to the table, our global network. Thank you. Next slide. As I said, I'm Gayle Peterson. I direct impact investing in social finance. I'm also Senior Managing Director at PFC Social Impact Advisors. I'm joined today by Jenn Pryce, who's the President and CEO of Calvert Impact Capital. Jenn is a longtime colleague, friend, and guest faculty member. One of our most popular, and also she's talented and has always extended her time and ideas to our students and our alums. So I'm really glad that Jen's joining us today to talk about how to bring in new ideas, do a reflection and bring in new ideas for the new decade. Next slide. I want to spend a little bit of time talking about what we've learned in the classroom, what our research has identified as some major themes of lessons learned. And this information is really culled from a variety of sources. Omidyar Group, Forbes, The Economist, Global Impact Investors Network, our own research. But again, some key highlights. We often have students coming to class who want to understand the structure without understanding the problem. So we always talk about what's the challenge you're trying to address? How can the structure of a deal address that successfully? Really understanding how to create the talent that you need to both walk in an impact investment strategy where you know the problem and you know the structure. That really understanding that local teams are critical to local context and connection. So building around the needs of those communities by listening to community, by creating community feedbacks is essential. And understanding that human capital contribution often exceeds the value of financial contribution. That what you bring to the table in terms of your own skills and expertise is as important as financial contribution. Match return expectation to the market you're serving. Often we'll get these in the classroom, and with some of our alums have come to the classroom thinking they're going to get a market rate return automatically, and that's not necessarily the case. It's really understanding problem, context, and what's realistic. And keeping a flexible toolkit to increase your impact from grants to traditional investments. And that's why we look across the ecosystem to deploy capital that's most appropriate and develop a network of partners. This is not, when you're dealing with the world's most complex issues, it's not about going solo. It's really understanding the network and the context in which you operate and to build those collaborations that are going to sustain the success that you're achieving over the long run. Next slide, please. The trends and drivers from 2020, we've got 10 years until 2030, which is when we're to implement the Sustainable Development Goals. And that requires us to really imagine how impact investment can be deployed, public policy and community action, how those things fit together so that we've got 10 years, it's not a long time to actually meet some very significant and important goals in both ensuring the most vulnerable have jobs, access to healthcare, aren't hungry, and that our planet is protected in climate change. It's also, we've been building a significant infrastructure and capacity from which to expand, that's the good news, expand the impact investment that we're doing. There's going to be continuing to be a growing demand by investors, again, as more money is shifting in the hands to millennials and Gen Z. But how will managers respond to this call for action? And we're in the process of watching that unfold as CEOs like Larry Fink at BlackRock and others, Goldman Sachs, are making money matter by actually defining goals for diversity and goals for climate change. And I think remembering there's money on the table and how do we deploy it is going to be absolutely essential. How do we connect entrepreneurs and community to those resources? We call that lost in translation when we're in class. How do we build the bridge between those with capital and those that need it? And how do we move that money in a way that's going to have the most powerful, positive impact? And we recognize that these are complex times, economically and politically, and how that plays out in achieving the SDGs and our ambitious social and environmental goals is yet to be determined. And our own inertia, our own inability to move forward is one of the greatest challenges that we face. So how do we move forward? How, even in this complex, chaotic times, how do we keep moving forward? Next slide, please. I think, again, the headlines for us for the next decade, impact investment can redefine capitalism. Capitalism is, again, as the way we envision it, has been promoting inequality around the world. The World Economic Forum continues, and the Sustainable Development Goals continue to call out the inequality in access to capital. And so how does impact investing actually redefine capital? How do we find our moral compass when we're doing impact investing? It's not just a technical deal-making structure. It's actually ensuring that our deals do no harm. We're looking at China and Asia really upping their game in terms of leading us in ESG and invest in sustainable investing, and that Latin America and Africa remain drivers in innovation. Smaller markets, but the fact is that there's a lot of amazing things coming out of these geographic regions. And climate and biodiversity, SDG 13, 14, and 15, I think will be receiving higher priorities and interest by investors because of the critical nature of not wanting to wipe off 75% of the species in the planet by being callous and not being aware of what to do for action. So those are some of the headlines. I'm going to turn it over to Jenn. And as you think about sending us your questions, which we'll field today throughout the webinar, I'm going to turn it over to Jenn for her to talk about lessons learned and trends. Thank you. Jenn?
Gayle, thank you. Can you hear me?
I can hear you.
Wonderful. Good morning, everyone, or good afternoon, wherever you're calling in from. And Gayle, thank you for the wonderful introduction. It's always a pleasure to be connected with Oxford and you and the program, however it might happen, either in the classroom or through these webinars. And as Gayle mentioned, I am with Calvert Impact Capital. And as I kind of share my thoughts and my lessons, learned with you, having been a practitioner in this field now for 20 years, and as we look forward to the next decade, I just want to take a moment and give you a touch of the vantage point that I sit at, and therefore the remarks I'm kind of sharing with you from what lens they're coming from. And primarily, I mentioned it, but I'll just underscore it again. We're doers here at Calvert Impact Capital. We're a practitioner that's moving money. And so as that is so, we are a nonprofit investment firm. We are an intermediary. It's jargon, but as an intermediary, what we do is we provide impact products and services to investors. These are investors, retail, institutional, financial advisors that are stewarding other people's money, or perhaps they're directing their own, but they're looking for the opportunity to invest their money aligned with their values, but find it a confusing and perhaps opaque process. So we're providing them the products, the services, and the knowledge to unlock their money to be aligned with their values. And where we're placing the capital is in funds and intermediaries. So these are first-time fund managers, or they could be on their third or fourth fund and been around for a decade or so. Those funds and intermediaries are then lending to the businesses and people in places. Right now, we have about 110 funds in our portfolio, $500 million under management, and we reach across 100+ countries around the globe and multiple impact sectors. So we see a lot. And again, what we're doing is really, we have one hand in the capital markets, and we're getting that capital out and putting it into communities that are simply overlooked by traditional finance. And so one of the questions from Aaron was, what are the best ways for new impact investors to learn and feel confident in impact investing? My first suggestion often is look for products and services like our Calvert Community Investment Note. There's also a resource called the Impact Assets 50. They put out all the impact investment products. And that's a great place to start. Gayle mentioned it before, it's not about going at it alone. Leveraging these products and services that are in the marketplace to put your capital to work is a great place to start and learn. And a lot of those institutions also have thought leadership and resources that they can share with you, so you can learn about the market and therefore increase your acumen in investing along those lines. So what we're really doing every day with impact investing is bridging. We're bridging these markets to traditional capital. So, success for us, if you think in the microfinance sector, is one that started 3 decades ago. There was skepticism that you could invest or lend to the poor and they would repay. Fast forward 3 decades later, that has been proven that you can. The poor can repay. And not only that, but the microfinance sector has really grown and flourished. And now traditional capital comes and funds it. Banks, Wall Street firms put capital to work in microfinance institutions like they do in all sorts of assets. And that, for us, is what impact investing is about. It's bridging to those traditional markets where really scale can happen. And so that was another question that came up, is how do one define impact investing? One definition is the doing, and the doing is really that bridging to traditional finance. A more formal definition is the intentional and measurable investment of capital. And for us, intentional is really around our impact measurement and management system. So we employ one both at the start of our investment and all the way through to the end of our investment horizon. And then the measurable comes through in reporting. And that was another question that one asked is, what is the importance of reporting and storytelling? Well, it's huge in impact investing, because what it's providing is transparency around the impact that the investment is creating in place, and bringing that back to the investor so that they can understand and also learn themselves. So with all that being said, we've been around 25 plus years. We've put over $2 billion to work, managed over 20,000 investors' capital. So we've seen a thing or two. I think that's commercial. And when we've seen a thing or two, what I wanted to share with you on the next slide is those 10 things we've seen, but also how they're informing our strategy and execution as we look to the next decade. Because as Gayle says, what we really firmly believe is structure follows strategy. So, being able to bring a fund to market, being able to do a good impact investment, that's all important. But the strategy and the execution is really linked, and understanding, strategically where you're going is vital. So these are the 10 things that we reflected on and are guiding us as we move forward. The first one are deals are made, not bought. And I can't emphasize this enough, that, to do the deals in these markets, it takes significant work to find them, to develop them, to structure them, and to execute them. And so at the end of the day, one question that was asked is, around sourcing deals. And it was asked, do all investors source deals? And, a lot of people do. And I would say it's expensive and it's inefficient. And those that do usually have teams that they can outsource the legal, the due diligence, the underwriting to. But what I would, encourage as a field as we move forward is to do less of this. There are a lot of people sourcing, originating deals, bringing products to markets. The more we can leverage the infrastructure that's being built, the better we are going to be as a field and as a society moving the financial system forward into a new construct, which brings me to the second, that scale is the economic necessity. Because of one, we need impact asset managers to reach a certain scale to offer attractive markets or attractive products in the marketplace. If you look at the market overall, not impact investing, not ESG, just the market, the financial markets, there's enormous downward pressure on fees. Investors, financial advisors, gatekeepers of people's assets do not want to pay for fees. But the reality is that to do this work in community that we're doing, in moving money where money isn't going very fluidly today, takes work. And there's a cost of doing that business and doing it well. And so to really be able to do that in a cost competitive way, and in a way that the capital gets into the community in the right shape and form, size matters. And so to be able to get economies of scale within asset managers is important. The second thing is innovation is a innovation is a double-edged sword. So we naturally need to innovate if we're going to build markets, but we also need to know innovation's limits. Before I really emphasized our role was in bridging to the capital markets and unlocking that source of capital to grow the capital that's needed in communities. So if our goal is to bridge to those traditional markets, we have to make sure that we're building financial products, financial structures, investment vehicles that are familiar enough that they aren't rejected by those markets. My experience has been that the traditional markets reject innovation. And so we need to really find a balance here of leveraging what we know, what the markets know, and also what innovations needed to really serve the communities that need the capital. Which brings me to 4. There's a gap between interest and action. It's hard for a day to go by without seeing a new article or survey that hypes the interest in impact investing and sustainability. But we're still not seeing that translate into enough dollars moving. And just to put a fine point on this, as an impact investing industry, we're a very small drop in the bucket. If you look at the Global Impact Investing Network's annual survey, the Jenn, they estimate us at about $500 billion, perhaps $1 trillion now of assets under management. The global capital markets holds 250 to 300 trillion of assets. That is the nut we need to crack. That is the gap that we're trying to close between interest and action. And to really accomplish that, to move the money out of investors' hands and into communities, 5 and 6, 10 things we've learned, number 5 and 6 kind of go together. One is you need to understand the capital markets, and 2, you need to understand the communities you're serving, and both are very important. Without understanding the financial system and the regulatory, operational, and technological complexities of that system, it is very hard to change the system. So if you, in your journey around impact investing, are looking to really influence how investors invest, how money moves out of the hands of investors into funds, if you're a fund looking to fundraise, understanding the capital markets and how money moves is vital to therefore be successful in your efforts. Similarly, if you go to 6, understanding the community is equally vital. To ensure that the money coming from the capital markets is formed to take the shape where it's actually benefiting the communities that it's intended to serve, means we need to understand and experience those communities, which means partnership. Going back to one of Gayle's, big points at the beginning. My experience has been it's very hard for one person, one entity to straddle 10 things, number 5 and number 6 alone, to understand the markets well, to understand community well, so the money is really serving without unintended consequences. Very, very hard. It's a very large spectrum. Partnership. This is where partnership comes in, looking to nonprofit organizations, NGOs, international development organizations that are working in these communities. Getting the voice of the community into the work that's being done is vital to be successful in this regard. And we found that smart subsidy is essential, number 7, that many times these under-resourced markets need subsidy to support the development of a functioning market. Again, there's a reason why money isn't moving into these opportunities. Either these business models are unknown or overlooked by traditional finance, or there's a misalignment of perceived and real risk. There was one question that came up about emerging and developing economies and what's my thinking on that. And one of my big thoughts is there's oftentimes a misalignment of perceived and real risk. If you're working in those communities, you understand the real risk of investing in those communities. And that's often a much lower risk profile than what the perceived risk is. But we do need subsidy often to bridge that perceived and real risk. And what we do see, and this is my warning flag, is subsidy is often used incorrectly. Wrong levels, a narrow mandate, mission, intention. There can be unnecessary terms or restrictions placed on that capital, and that can distort or hinder market development. Number 8 is patience. Patience in a lot of ways, but in this one, it's required in its development of a track record. And this is where a great optimism for me comes in, is we've, collectively as an industry been at this for 10, 15, you could go to 20, 30 years in some ways. And what happens over time is track records are developed, track records of repayment, track records of strategic sales of investments, of communities growing and changing and understanding the impacts of the investments in those communities. Those track records are really important to understand, and for investors to be able to invest. And if you want to see what track records look like in a way that creates rigor for investors, we did do a report on gender. You can find it on our website called Just Good Investing. And what it looks at is the last 10 years of our investment portfolio and looks at the financial performance and the gender strength of the investments we have made. And it does show a positive relationship as measured by return on assets, return on investment, return on sales between the two. And that type of data set is what helps investors gain comfort and understanding about something that might be unknown to them in prior, investment practices. So the last two are kind of big ideas, but technology is an important enabler, but not a substitute. And you can put this into a lot of context, but I'll put it into the one that we see often, which is people still need people to broker relationships, is what we see in the field. That technology can gather data, it can inform. There was a question that came in about AI and using AI to ensure measurable social and environmental impact. Leveraging AI in those ways, I think, and I have seen, is extremely effective. But using technology to replace human interaction, education, brokering, bringing people into understanding, I have not seen be successful. And very bluntly, some investment platforms are a prime example of seeing that failure come to fruition. The last one is impact investing is both an art and a science. And what I mean here is what I have found is impact investing is grounded in the basics of finance, of credit, of equity investing. But we said it before, structure follows strategy. So what that means is knowing what tool to pull out of the toolbox based on the context, the community you're working in, and the strategy that's being employed is essential. And so one of the questions that came in this regard is what is essential to having a healthy fund? And my answer there is, all the same underpinnings as a non-impact fund. You need a legal infrastructure, you need a leadership and governance infrastructure built, but you also need an impact measurement and management system, and you need a strategy. And you need to know what that fund is seeking to solve. And that's the art. Is the fund even the right vehicle to address the issue or the failure in the marketplace? So, all this, at the end of the day, kind of can be wrapped up with impact investing, both as an art and science. What I find is, knowing the market is vital. All this takes time as a practitioner. The art is learned over time. It's not something that, overnight is gifted to you. And, that brings me, it's not about a shiny new thing. So one of the questions that came in a few times was what skill sets we look for when we hire people. And, very honestly, it comes down to curiosity, interest, a willingness to learn. We do look for finance skills or other skills because we have needs around marketing, around communications, around capital raising. So yes, we do look for skills within that right functional area, but curiosity, interest, willingness to learn, those are the things that really set candidates apart when we're looking to bring people into a team. So Gayle, with that, I'll put it back to just broad questions from the audience and any comments from you.
No, that sounds great. Thanks, Jen. And again, we hope you'll send us your questions. We've been trying to get a sense of what's happening, what have we learned, where are we headed. We'd love to hear from you. We have a question from James. And again, for our webinars, we really like to have questions sent in prior to the webinar so that we can begin to structure our talking points, but also throughout the session so that we're getting real-time questions from you as you're learning and you're thinking about what you need to be successful. So for James, for the sub-Saharan Africa and South Asian markets, what are the latest trends, ideas, and innovation for impact investing in the area of manufacturing, job creation, and affordable housing? At the moment, energy access is a hot topic, but I don't see much movement in what to do with this energy once it arrives and how it might help local economies and consumers. Jen, you want to field that one?
Yeah, I mean, the trends could be cut up in a lot of different ways. One that we see is starting to create financial solutions to local currency needs. So stepping back, a lot of small businesses, a lot of manufacturing, a lot of capital needs have been met through investment, but oftentimes that investment comes in as dollars or euros, which really exposes the businesses in place to take on currency risk in addition to the operating risk and other business risks that they're taking on just by the nature of doing the work they're doing. And one of the great innovations we're seeing along the lines of impact investing is more local currency solutions. One in particular is now businesses, organizations, affordable housing developers, one just issued in Nigeria, are going to the local markets and issuing local currency bonds. And those local currency bonds are providing the capital for a small and medium business to grow to the next stage. And that's what's really important in a lot of what we see as it relates to filling where there's capital gaps in communities, is ensuring that the entrepreneurs in place don't fall off the financial continuum so that they can build their business, getting access to equity, to early debt, to scaling debt. In this case, what I just articulated is to large amounts of local currency capital. And what we're seeing is that's enabling businesses to successfully scale and grow and therefore meet the needs of communities. That is really exciting because what it's also doing is just developing the local markets and enabling more local capital to invest in solutions, innovations that are emerging within the African continent, rather than all the capital coming from outside the continent and kind of being put into solutions that perhaps aren't coming from community, but are more biased to what those investors are deeming have value plus financial return.
Well, and Jen, I think it would be helpful too. We've got Patricia has a question, Maria has a question. Patricia's focused on Central American countries and not receiving the attention from impact investors. And Maria's talking about our experience in Latin America. So I think it would be great to shift over to Central and Latin America to really talk about our experiences, your experiences. We've been really fortunate. Daniel Izzo at Vox Capital has been with us as a guest faculty, really leading the charge in Brazil on impact investing. And we probably had 20 to 30 students from Latin American countries who are doing remarkable work, spearheading new initiatives across the SDGs and riding the political volatility of changing markets and changing economies based on those politics. And so we're happy to put you in touch with our colleagues throughout Latin America who are doing remarkable work from climate change to healthcare to housing. Jen, your thoughts and ideas?
Yeah, Central American, Latin American countries, very bluntly, I do think are overlooked from investors. Those regions have changed dramatically over the last decade, 15 years. But there was a sense in the early years, microfinance found its home in Latin America and Central America 15, 20 years ago. And there was a lot of investment made. And there was a sense that a lot of that work got those regions to a healthy, sustainable place, quote, middle income countries, and that, the work was done. A lot can be argued with everything I just said. I was just sharing what I see as the sentiment from investors as they look at those regions for investment. What I do find is we do put money to work in those regions, and there is the need for more intermediaries, like you mentioned Daniel's great work with Vox Capital, to take investor capital and bring it into the businesses and communities in their region. There are political challenges right now in Latin America that make it difficult. I would even underscore that Brazil is a very difficult country for foreign investment capital to travel in. In particular, getting money out of Brazil as a foreign investor is enormously challenging. Mexico has a lot of activity, especially around access to credit, providing capital to small businesses, individuals, creating opportunities for people to really improve their quality of life in ways that are empowering. And we're seeing a lot of activity in Mexico in that regard. But there's a lot of work to be done in those regions, and it is a region that I think needs more conversation and intention from investors. And it is, I would be very blunt, unfortunately getting overlooked at this time.
Well, and I think that there's a project that we're launching that will look at fisheries, forests, economic development in Chile, Peru, Mexico, and Indonesia. And over the next 18 months, that will be an opportunity for us to go deep into to those countries and impact investing. We have a vibrant, again, alumni network in Latin America. And I think that we'll be reaching out to our colleagues in our own work and doing some special teaching and coaching in Latin America and Central America over the next 18 months. We have another question from Charlotte, and that is, what are the best strategies for supporting the most underserved communities and marginalized group through gender lens investing?
That's a great question. The most marginalized and undervested through gender lens investing. And so, stepping back, partnership, we mentioned it before, but when you're looking to really address the most marginalized and underserved, generally you need to understand the realities of what's happening in that community. And so if you're not in that community, if you're not directly engaged in that community, if you're sitting with investment capital in Europe or North America, just as an example, or you're a fund that's looking to put capital to work based in Europe or North America, finding a partner that understands the realities of those communities is really important, so you're informed in how to move. What we have found with our gender lens strategy is the lens piece is one where it's not narrowing the opportunities, but it's looking to expand the opportunities, which I think is also important. When I talk to people about gender lens investing, I often get a sense that they think it's a limiting lens, and it really isn't meant to be that. It's meant to be a lens to bring more in. And so using a gender lens in looking at those communities, it's thinking about how can businesses seek to speak to, market to, develop products and services to the whole community, both the women and the men within them. What are the tactics to reach those women in community if they perhaps don't have the opportunity to interact with that business because they can't get out of the home to go to the market to learn about what products and services are now being offered, perhaps around renewable energy or mobility and transportation. So how do we get marketing communication? How do we get sales tactics so you can reach the women if they're not coming to you? Those are all the really deep questions around strategy for the businesses that are working to really reach the most marginalized women in communities. And again, it's about how do we open up and bring more opportunities to women rather than looking narrowly at women as a number to be counted. And in our portfolio, just speaking from experience, what we've done therefore is all our investments have a gender impact, and we account for that. We measure the impact of all our investments. And some of them are very strong, some of them are weak. And what we're looking to do is work with the weaker ones to help them build their gender engagement and strategy with the communities they're serving, whether it's the deeply marginalized or the middle income potentially. And with that, strengthen their business so that they can reach more women successfully within the work they're doing.
And I also think that, we have some resources that I think we can post on our website. We have a gender lens investing brief that we share during Impact Investing. We have a case series with UBS Optimist Foundation on their social finance strategy, of which, again, their focus has been on educating girls with educate girls in India. So it gives real life illustrations. Our Wallace Global case study that we use in class focuses how you shift from divestment into investment specifically targeted at low-income women, and what are the new economic opportunities that can be provided when you shift from divesting into investing for those most vulnerable. And again, for SDGs, those most vulnerable are women and girls. And so as we think about where capital should flow, building relationships with organizations that truly understand the needs of women and girls, how to deploy those resources successfully, how to do no harm when you're doing that when you're using your capital for common good. And so there are some very specific, very tangible illustrations. If people would like to have access to those, we can provide a link. Next slide, in terms of other questions. Nicole's got a question around solid and healthy funds and the role of storytelling and reporting in impact investing. And Jen, you touched a little bit on impact measures, but the idea of storytelling is a more nuanced approach to impact measures. So I'd love your thoughts on that.
Yeah, it's a great one, because it's a tool, right? Storytelling is one of the tools we have to really share the work and really bring people into the conversation. So I find very personally it's a powerful tool in that regard, especially when a lot of the words impact investing, ESG, sustainability have all been really muted. There's not great understanding when you use those words and you're talking to someone across the table if they're really defining it the same as you are. We can all define impact investing different depending on where we sit and what we believe. And so I find the storytelling brings us to a place of mutual commonality, and then we know we're talking about the same thing. And whether that's wrong or right is not it, but it gives us a place to start from to then build to. And so scale is another funny word that I find there is different definitions depending where you sit. If you're in a large investment bank or a family foundation that's managing billions of dollars, scale can mean $100, $200 million. If you're working in Central America, creating a fund to provide the last mile connectivity of water to a household, it might be scale is $10 million, can do 10,000 homes. And so scale is very different. And again, storytelling, I find, can fill the gaps between words that can be defined very different by the person and where they sit. And I think storytelling is something we still need to learn to use as a kind of impact investing community to get beyond just impact investing to really change the financial system so others can really understand how decisions one are making with their investment dollars affect people that they are so removed from they might not understand. So Gayle, something you always say, the unintended consequences, I think stories can really help to mitigate or even make people aware of.
Thanks, Jen. Barbara and Daniel got some provocative questions. So Jen, you want to field those? I'm looking at additional ones that Bryn sent.
Yep, you bet. So, Barbara and Daniel, Barbara's is really around impact investing opportunities. Um, and, do impact investments, the selection criteria, the minimum size investment horizon rate of return differ between family offices and investors? And yes, they do. My experience is you've seen one family office, you've seen one family office. So, every family office or even every investor has a portfolio of investments, and they have different needs from those investments, an overall rate of return they need to see. Perhaps they even have a mission imperative for those assets, and that very much will dictate their investments and the strategy that they deploy those investments with, and how patient or market-oriented rate of return they'll be demanding. There was one of the 10 reflections that I shared, smart subsidy is essential. Within that, not everyone can provide subsidy capital. We see it generally coming from governments, development finance institutions, and family offices. And those are all parties that have the capacity to take market lower risk adjusted returns, have more patience in when they get repaid. Perhaps they don't need to be repaid for 10 to 15 years. Where other traditional investor that has obligations, whether it's a child's education or their own desire to purchase a home, for example, need to have the ability to have returns that come in at 1 to 3 years. So yes, family offices have a lot of diversity in what kind of dimensions they are asking for from their investments, all the way from moving as a subsidy provider to being more of a market rate player. And then Calvert seems to have a pretty diverse range of impact areas. That's absolutely correct. We invest all across impact areas. And so the question is, challenges we face in finding attracting talent and expertise required to manage the portfolio. What would be the common denominator? And so what I shared before is very much a common denominator. It is the qualitative skills that, kind of the staff shows up with, having interest, having curiosity, having the ability to listen and learn about what our partners, what our investees' needs are. At the end of the day, we're really looking to unlock capital from investors, but we're meeting a market need, and we're then backfilling an investor demand. But that need requires that we really are listening to what communities' needs are. And so those are very common qualities that extend across all the staff here at Calvert. What we find is that finding that talent is not hard. It is there. This work, I find, is not cookie cutter. So, staying in this work requires that one wants to continue to challenge oneself. This comes back to it's an art and a science. Even when you learn all the skills about how you move money and what the new fancy investment vehicle is, communities change, environmental situations change. Today's challenges are different than yesterday's. And what we're doing as we move our money is really taking into consideration the context of where those people on the planet sit. And so understanding the relevance of today in connection with our money is ever so important.
Well, I think that's a good segue into our last question. It's from Sarah, which is, how do we combat and avoid greenwashing and other parallel issues? Is authentic community engagement and leadership key? And the answer is yes, yes, and yes. One of the things that I do in impact investing in social finance is help students scratch beyond the surface to understand what unintended consequences are. How do investors build healthy relationships at a community level? And how do you find your moral compass when you're dealing with really difficult challenges, pressures to make a financial return, pressures to measure impact. So this impact investing class actually is coming up in March. We'll be spending a lot of time looking at case studies where things went wrong. And what's the obligation of you as an investor and a leader in the field to scratch beyond the surface, to use that curiosity to say, did we ask enough questions? Do we know enough? Do we do harm? Have we unintentionally done harm? How do we actually have the transparency and integrity to model the behavior that's so necessary? And if we go back to the original, one of the original highlights of how can impact investing change the ethics and morality for money that matters around capitalism. And that's something that that Jenn has been focused on, and that we spend a lot of time in class, because at the end of the day, how we speak the truth, tell the story honestly, and all learn from it as pioneers in the field to move into the next decade to have the most positive impact we can, to move those people who are most vulnerable to touch their lives positively. And that's a critical component of what we teach, what we train, and what we hope will be transformative for your experience at impact investing, social finance, and impact measures. We've run out of time. I want to turn it over to Annabelle, who can spend a little bit of time talking about what courses we offer to address everything from deal structure, deal flow, building healthy relationships with community and partners, to avoiding greenwashing. I want to thank Jenn for joining us again. I look forward to seeing you in March. And thank you for your questions, and we'll provide some resources on our website. Annabelle?
Thanks so much, Gayle, and thank you to everyone who's spent the time listening in today. I hope you found it helpful and informative. We have a number of programs in our impact portfolio. Impact investing, which is taking place this March, is currently at capacity, but we have launched the applications for next year if you'd be interested in applying. We also have impact management taking place in the summer, and then social finance in the autumn. If you are interested in finding out more or putting in an application, there's a link at the bottom of this slide, and then there's also my details on the next slide, where you can find out more information. We also have a monthly newsletter, so if you want to stay up to date with either program news, webinars that we're running, or general content, please get in touch with me directly, and I can make sure that you're added to our mailing list. This webinar, along with all of our historic webinars, are also always uploaded. The recording's always uploaded to YouTube. So if you have a colleague or someone that you wanted to attend today and weren't able to, or if you yourself look at historic webinars, we're happy to provide you with a YouTube link so you can look at those in your free time. Thank you once again, and hopefully we'll see you next time for the next webinar. Gayle, anything else from you?
No, I thank you. I appreciate it. This is a wonderful way to launch the year. Again, if you'd like to send us some of your questions, if we didn't get to your to the hot topic on your mind, let us know. And we hope you'll join us in Oxford for social finance, impact measures, and impact investing. Thank you so much for your time.